All right, let's take a look at exercise 11-13A. So this will help you with your homework assignment that's due on Friday. So this company, JAE Corporation, at the beginning of the year, they have common stock. It's $10 par, and the board of directors has authorized them to issue 20,000 shares. That much is authorized, but they haven't issued that much. They've issued 2,000 shares, which are all outstanding, meaning held by shareholders. So that's $20,000 for common stock. The additional paid-in capital in excess of par amounted to $15,000, and then they have retained earnings of $82,000. Again, that's the net income of the company cumulatively that has not been distributed back to shareholders. So in this case, they have three different transactions that occur during the year. They issue 3,000 shares of $10 par common stock for $25 per share. They repurchase 500 shares of their own common stock for $26 per share. That's going to be treasury stock. And then they resold 200 shares of that treasury stock for $30 per share. So I'll walk through the requirements here. The first one is how many shares of common stock were outstanding at the end of the period. Well, in that case here, we have beginning common shares. Now here we're looking at the number of shares, not dollar amounts. So I have beginning number of shares of 2,000. That came from the problem. Transaction number 1, we issued 3,000 new shares. Transaction 2, we repurchased 500 shares. So we took those out of the hands of shareholders, put them into a desk drawer in the company. And then transaction 3, we resold 200 of those shares. So I have 2,000, I add 3,000 to the amount that's outstanding, subtract 500, and add back the 2 that I resold. So I end up with 4,700 shares that are outstanding. Think of outstanding as being owned by shareholders. The next requirement is they want to know how many shares have been issued. So issued shares include the shares that are in the desk drawer in the company, the treasury shares. So here I just have the beginning shares issued, 2,000, the additional shares that we issued of 3,000. So 5,000 shares have been issued, but only 4,700 are outstanding because 300 are in my desk drawer, okay? The next thing they ask you to do is to document these transactions on the grid that we've been using. So I set up a grid here with the various categories across the top. So the beginning balances, now they didn't give us a complete balance sheet, so we don't know what the cash amount is. That's not necessarily critical here. But I've got $20,000 in the common stock category, $15,000 in paid-in capital in excess, and then $82,000 in retained earnings. So transaction 1, where I issue shares, the exact language, I issue 3,000 shares of $10 par common for $25 per share. So I'll receive 3,000 times 25. I'll receive $75,000 in cash, and I will increase common stock by the par value of those shares. So 3,000 times $10 is $30,000. Remember, changes to this column here are always done at par. And so then the excess, $25 over $10, if you want to do it on a per share basis, times 3,000 is $45,000 in paid-in capital in excess. So on both sides of the equal sign, I have $75,000. Then transaction 2, we repurchase 500 shares at $26 per share. Again, we record that at cost. Okay, we don't worry about par when it comes to treasury stock. So I spend $13,000, that leaves my company, and I record $13,000 in treasury stock. And again, that's a negative number because it's a contra account. Its balance is different than its neighbors there, okay? Then the last transaction, we resold 200 shares of treasury stock at $30 per share. So we had a gain. So in that case, I record the cash I received rather, $30 times 200 shares. So I got $6,000 for selling 200 of those shares. Here's the important part. I reduced the treasury stock column here by the cost of those shares. The cost of those shares, remember from the last transaction, is $26 per share. So if money goes into this column at $26 per share, it has to come out at 26 per share. So I reduce this column by $5,200. Again, I reduce a negative amount with a positive number. And then the gain that I recognize, that $4 per share that I sold it above what my cost was, is recorded in paid in capital in excess. Some companies will have two columns. They'll separate out paid in capital in excess for common stock from treasury, but we'll just keep it a little more simple here. Then the last thing they ask you to do is prepare a detailed stockholders' equity section of the balance sheet. So the way that's going to look is as so. So the first thing I'll have is common stock, and there's quite a bit of verbiage here, but this all gives information to potential shareholders about the amount of shares that exist. So we'll say common stock, $10 par value, 20,000 shares authorized, 5,000 shares issued, 4,700 shares outstanding. And that's $50,000. Then I have paid in capital in excess par for common stock, that's $60,800. So that's my total paid in capital. That's the amount that has been paid in by shareholders. I have to shift this over a little bit. $110,800. That's what's been paid in by shareholders. The next thing I'll have is retained earnings. That's $82,000. Okay. And then I'll have less treasury stock, indicate that it's 300 shares. That's negative $7,800. So I have total equity of $185. So I hope that was helpful, and good luck on your assignment.